Where people say the housing market has dropped across the country, in most areas, the housing market has not dropped. What has stopped happening is people are no longer giving over asking price. So these two houses we built, we traded the city out of some land and we built them in a nicer neighborhood than we want to rent in. So I don't want to rent a house worth $400,000, $500,000. So we started on the houses, and the houses we were building were $450,000 houses. And then at the end, before we finished them, they were getting $650,000 for the same houses. They went up that much that people were paying that much over asking price. When we finished it, the 2 months before we finished, the market had already leveled off, and then it just started dropping and dropping and dropping and dropping. And now we sold the house. We sold one of the houses for $495,000. But when we built the houses, our target goal to sell the houses was only $450,000. That's where we were. That's what we was trying to get out of them. So we didn't lose any money. You know, I'm not losing any money by selling it for $500,000 rather than $650,000. I mean, it would have been nice to get another $150,000, but you know, it wasn't worth $650,000. That's just what the market was bringing at the time. What it's worth is the $450,000, or they appraised at $500,000, so it's worth the $500,000 that it's worth, and that's it. Tennessee, in the area I live in, just outside of Nashville, they're still expecting it, or projecting it to go up another 8 to 10% in property values over the next year in 2023. The government's printing money. As the government prints money, the value of your dollar goes down. As the value of your dollar goes down because there's more dollars in circulation, all appreciated assets, whether you own gold, whether you own silver, whether you own real estate, whether you own a truck, whether you own a car, a motorcycle, all of that stuff, even though a car, a truck, and a motorcycle are depreciating assets, they went up when the government was printing so much money through COVID and all. They still went up in value because the dollar went down so fast and so hard, and the dollar's still dropping. So another thing you need to look at right now, we got about over 60% of the debt that the United States has right now is going to be called within the next 3 years. All of it's coming due. So all of that debt was financed at like 1.5% interest. 26 or 23%. I'm gonna reverse those numbers. So it was either 26 or 23% of that money is coming due in the next 12 months. When that money comes due in the next 12 months, what's going to happen is they're not going to refinance that money at 1.5%. They're going to refinance it at market rate, which is probably going to be more like, maybe they might get 4% or 5%. So the money they got to print right now, because we print the money to pay the debt because we're 140% of GDP that we owe. So that means out of what the government brings in, they owe 40% more money than what they bring in that they got to pay out every year. So how do they get that 40%? The only way they get that 40% is they print money. If they don't print money, the government defaults on its debt. When the government defaults on its debt, we lose our country.